Everyone thinks the market is buying SpaceX. I think it's buying something much bigger. Because when investors get excited about a major IPO, they're usually not buying a company. They're buying a future. They're buying growth. And most importantly, they're buying risk.
Hey everyone, I'm Nolan. Lately, a lot of attention has been focused on SpaceX and the possibility of one of the biggest IPOs we've seen in years. But I don't think the real story is SpaceX itself. I think the real story is what SpaceX is revealing about investor psychology and what that could mean for the broader market.
Most investors look at the headlines and come away with the same conclusion. They see growing excitement around SpaceX, along with strong demand from investors looking for exposure. From that perspective, the conclusion seems pretty straightforward. If attention keeps increasing and demand stays strong, it's easy to assume SpaceX is driving market enthusiasm. But I don't think that's what's actually happening beneath the surface. Because one company alone, no matter how exciting, doesn't suddenly change the mood of an entire market. What changes the mood of a market is confidence. And confidence is exactly what I think we're starting to see return as investors become more optimistic. That's why I don't think SpaceX is really the story. I think it's acting as a signal that investors are becoming more comfortable taking risk again. That's the first distinction I think investors need to make. The story isn't really about one company. It's about what that company reveals about investor behavior. When sentiment starts changing, the effects often reach much further than most people expect. Once investors become more willing to take risk, that change rarely stays confined to one stock. It usually spreads across the market and starts influencing how capital gets allocated. Investors stop focusing primarily on protection and begin focusing more on opportunity. They become more willing to take chances on companies with stronger long-term growth potential. They also become more comfortable paying higher valuations. Instead of focusing on what a company earns today, they begin focusing on what it could earn tomorrow. That's usually how risk appetite expands throughout a market. Money gradually starts flowing toward future possibilities instead of today's certainty. And that's why I think this story matters much more than many investors realize. What we're seeing may not be excitement around SpaceX, but a broader expansion in risk appetite. What we're really talking about here is a shift in mindset. When investors become more optimistic about the future, money doesn't stay concentrated in one place. It starts moving toward growth, innovation, and opportunity. Look at what typically happens during strong risk-on environments. Certain parts of the market tend to attract more attention and often outperform the broader market. Growth stocks often outperform because investors become more willing to pay for future potential. Technology companies usually benefit for the same reason. Small cap stocks can also attract more attention as investors search for opportunities with higher upside. Capital gradually moves away from defense and toward growth. That's why I don't think this is really a SpaceX trade. That's a psychology trade, a shift in investor behavior that's beginning to spread across multiple asset classes. The company may be getting all the headlines right now, but the real story is that investors appear to be becoming more comfortable embracing risk. Markets are driven by numbers in the short term, but over longer periods, they're often driven by sentiment. And sentiment can have a surprisingly powerful impact on asset prices. At the same time investors are becoming more excited about SpaceX, we're also seeing changes in the broader macro environment, and those changes may be helping support a more optimistic outlook across the market. Oil prices have started to pull back from recent highs. At the same time, inflation concerns have become less intense than they were a few months ago. As a result, investors are beginning to imagine a world where the Federal Reserve faces less pressure. And when investors believe monetary conditions could improve, risk appetite often starts to improve as well. Now, none of this guarantees that the outlook will become more favorable, but markets rarely wait for certainty. Markets trade expectations, not certainty. Markets move before the data becomes obvious. And right now, those expectations appear to be shifting in a more optimistic direction. Risk appetite doesn't rise in isolation. It usually rises when investors believe the future could be better than the market previously expected. And that's why changes in expectations can become so powerful. Some of the strongest rallies in market history weren't driven by sudden changes in earnings. They were driven by changes in how investors viewed the future. Confidence improved before fundamentals improved, and investors became willing to pay more for future possibilities before those possibilities became reality. That's often how multiple expansion begins in financial markets. Valuations rise because investors become increasingly optimistic about future growth and future earnings. This is one of the most important forces in financial markets, because a change in psychology can sometimes move prices long before a change in earnings does. But investors should also remember that optimism has limits. When expectations become disconnected from reality, that's usually when bubbles begin to form. Of course, risks still exist. Sentiment can change quickly. But when I look at SpaceX, I don't just see a company. I see a shift in investor mindset. The market isn't buying SpaceX, it's buying optimism. I'm Nolan. Let me know what you think in the comments, and don't forget to subscribe to Nolan Alpha. I'll see you in the next one.